Alright guys, I'm back with another YouTube video and I hope you guys had a good trading week last week. Me personally, I did not take any trades. I literally made $0 last week, and I'm going to go over on how a profitable trader approaches market conditions like this. So obviously the thing that keeps people profitable is their risk management and the outcome of what trades they take. So I put together a PDF of exactly why I didn't take any trades this week, and also how a profitable trader would go about on how they would control their mindset on not making anything for a week, pretty much. So obviously, as you see, I still have all of my accounts. If I did trade, I very likely possibility I could have blown these accounts or even been at negative balances rather than actually having a balance and just hitting my winning days and taking a payout. So first things first, I want to start talking about red weeks are normal. Bro, it's the market. Like, the economy is not always going to be bullish. It's not always going to be perfect. Even if it's bearish, if you do not take entries going lower because you don't believe that we're supposed to be proceeding lower, that's normal. This week, in my opinion, for me at least, I did not take any trades because I did not see any entries, bro. Either the draw on liquidity was not clear. I did not know where price was going, which if I don't have an idea on where price is going and the draw on liquidity is not very clear and not confirmed, I won't take a trade because that's the main foundation of my trade. The entry model is just like a template that you use to get a safe entry towards that draw on liquidity. But if I don't have a strong draw, I'm not entering. That's like no way I'm entering. And red weeks are completely normal. The market is not always going to be perfect. It's going to chop around sometimes. It's realistically, it's the beginning of the year. Usually when seasons do change, it is like that. In my opinion, winter price action is definitely the best price action. But even profitable traders experience weeks with little to no profit, like either red weeks or absolutely no profit. Now, if they have a red week, they don't take it too personally. They don't go over trading, blowing their accounts. They sit there because they know it's part of their model and they know in the long run that they're profitable. Market moves in cycles. If it's trending or it's choppy. Obviously, price action this week was not really trending. We had one day where we were pretty bullish, which was pretty decent. You could have got a nice entry towards that. However, I was already off because it was a little bit later in the market session. I usually trade for 1 hour max and I'm already off the charts. So by 7:30 my time, I'm already off the charts. The goal is long term, not winning every week. So you're not supposed to realistically take a trade every single day. You're not supposed to win every single week. Your whole goal is throughout that full fiscal year, you need to be up in profit. That's literally the whole goal. Your goal is not being up this week. Your goal is not being up this month. Your goal is not being up in 2 months. Your goal is being at the end of this year. When you go to file your taxes, you know that you're up in profit. You know that your wins outweighed your losses, and you know that you're actually profitable. Two, capital preservation. Protecting your capital is your number one priority, specifically with prop firms. If you're trading a prop firm and you have 5 funded accounts, for example, this is what, about $200 per account. So that's approximately $1,000 right here. Yes, it's not my own money. So technically I have $250,000 that I'm trading with because I have 550K accounts that I'm copy trading. However, it only cost me out of my own pocket roughly about $1,000 to get these fully funded accounts. Now, I'm not counting blowing the evals, getting like, because I quickly full port them, I blow like probably 2 or 3 evals, probably approximately per funded account. Like usually every 2 evals I would pass a funded. So if you really want to count that too, then around $1,200, $1,300 for these accounts. It's not worth for me to blow these accounts, lose my own $1,200, then I have to sit here for like at least 3 or 4 days trying to pass all these accounts so I can get back to max allocation just so I can take proper trades. And what I've noticed personally with market experience, every time we have a week that's mid like this, we have choppy price action. We're not like delivering to price action normally. We don't have any clear draws on liquidity. That next week is usually way better. I don't know if it's just like a coincidence or if like I've actually experienced it, but literally like every time it has been like that. And specifically Fridays, that had like last year there was like 4 or 5 weeks straight in a row that Fridays were like the most godly price action ever, but going up that whole week it was horrible. So obviously this Friday was not like that, but overall I'd rather prefer to save my $1,200, not even about the money but about not blowing the accounts, because these accounts can literally get me a $25,000 payout. So it's not the fact about how much I spent on making the on getting the funded accounts and the evaluations passed, but it's more about the opportunity cost that I have on making $25,000 if I do have these accounts. Maybe let's say Monday or Tuesday I'll hit a $2,000 trade. Times 5 that's $10,000 I made that day. If I didn't have these accounts and I blew it on Friday from a stupid trade that I literally know I shouldn't have took, then I'm going to have to spend Monday passing evaluations, not making real money instead. So you kind of have to take that into consideration as well. You have to preserve your capital when it's needed. Obviously, these are prop firms. Like I've always said, they're rinse and repeat. They're a full return on investment game. Always risk heavy. I'm not saying like protect it like it's your like actual money, but you need to protect it when it's not a proper trade. That's just how capital preservation works. Small controlled losses are completely normal. Now, if you're gonna sit here and take a loss, you're gonna de-risk because you don't think the trade is good. That's stupid. That's not normal, because realistically, if you're taking a trade knowingly that it's not a good trade, you're just de-risking so you don't lose more of your account. That doesn't make sense. You're pretty much willingly, instead of losing $500 per trade, you're willingly losing $250 per trade. Why would you want to lose that if you could just keep it? Like that, I never understood de-risking. De-risking is different when you have to because of your buffer size or your account size. That's completely normal. But if you're de-risking because the trade is not as good as you think, then you shouldn't be taking that trade in the first place. You should have absolutely no hesitation on your trades. Third, good risk management keeps you in the game. I don't care if your profitable strategy works. I don't care if you make money using it. If you do not risk properly on your trades in the long term, you are not going to be profitable. It may work for a year. It may work for 2 years. But on the third year, it may cook you and you might lose all your money you made in those 2 years. You have to manage your risks properly. Like if I'm entering a trade right now on a brand new funded account, I'm only risking $500 per trade. I don't care. I'm only risking $500 per account, obviously, per trade. So that brings my buffer size up to obviously 500 times 5 accounts, which is 2,500 per trade, because it's separate accounts. Obviously, they're just copy traded. But let's say you have one account, right? You just passed this 50K account. You have a 50K or a $0 balance. You have a $2,000 max drawdown. I'm only going to risk $500 because it's very unlikely for my strategy with the 85% win rate almost for me to lose 4 trades in a row. If I lose 4 trades in a row, that's either A, like my whole statistic for the full year is over and I'm just going to win the rest of the year, or B, I did something wrong. Either my draw liquidity was wrong, I took a stupid entry, I FOMO'd in, whatever I did, I risked too heavy, whatever I did. If I'm only risking $500 per trade, best believe by the second, if I'm $500 in drawdown, the second trade, I'll bring it back up to current and I'll trade another $500. I'll bring it up, and just like that, I'm up. I'm at a $500 balance. From there, I'll risk $1,000 per trade. $1,000 per trade, boom. Obviously, I only do 1-to-1s usually, 1 to 2 maybe. But from there, I'll be at 1,500 per account. Now I can actually risk a little bit slightly heavier. I can risk 1,500 per trade. If I lose, I'm just going to go back to my max drawdown. It's completely fine for me. So you have to go based off of your buffer size. You can't really trade based off however you feel like it. You have to go with your account size. So that's also the risk management plan. If you guys want, I can make a full video on how I would manage my risk and how I usually do it to build up buffers all the way to $6,000, $8,000, and then obviously take max payouts. The point of these firms is to take max payouts and obviously rinse them. I usually take four payouts on per Express account, and then I blow them and I rinse and repeat just to avoid getting moved to live accounts. Now, market conditions. So this is the exact reason why I didn't take a trade this week. Some weeks simply don't provide clean setups, and you guys need to understand that not every single trading day, not every single trading week, or every single trading month is going to bring you profits, and you do not need to trade if you don't want to. It's not an obligation to trade. Now, obviously, with funded accounts and evals, you have eval you have a month and they're going to charge you again. So if you want to pass it with them, you shouldn't be even sitting on eval for a month realistically, bro. Max a week. If you're not passing your evals within a week, you're risking way too little, or you're taking dumb setups. As far as funded accounts, I know some firms, they do close your account if you don't take a trade within a month. I'm not saying properly take a trade. If you have to do it in that sense, literally just enter with 1 micro and just exit. Who cares if you lose $2 or if you make $2? As long as you do it just so you don't lose the account, that's understandable. But I'm speaking about don't take actual setups if you don't have to. I didn't see anything clean, so I did not take it. I saw actually one thing clean, but I wasn't on the charts, which I provided into the Discord later. let's see which one it was. I think it was this one. Yeah, this was the trade. This was like honestly a decent trade. Like I would probably take this if I was on the charts. It was closer to like 7:45 ish. So I didn't. Obviously, I wasn't on the charts. I usually get off at 7:30, like latest. If market's chopping or it's not good, I'm literally off within 30 minutes. Um, and low volume or choppy price action obviously reduces your opportunities. Now, specifically if you're day trading continuations, obviously as continuation trader myself, we practically only make money when market is trending and with volume expansion days. We're not going to make money when market's chopping around. We're not reversal traders and we're not supply and demand traders. We don't trade in zones. We trade with straight volume. That's literally our whole model. It's just volume. If you have good volume, we'll be getting good trades. That's literally it. So you should not be trading. Again, it depends on your strategy. Avoid forcing trades when conditions are poor. If I physically know that the conditions are not met and it's not meeting my criteria to take a trade and my draw on liquidity might not be hit because of market conditions, why would I willingly want to take a trade and possibly lose money and lose my balance on an account? When I take the payout, that balance is going to obviously add on top of it. Those $200, $300 little losses that you take throughout the full month can add up to multiple $1,000s realistically. If you're losing $500 a month, let's just say, on stupid setups, if you're copy traded, that's $2,500 that you've pretty much lost from your balance. Obviously, requesting the payout, that'll be $1,250. You practically lost yourself $1,250 just because you wanted to take stupid setups when you could have just saved those setups. You know what I mean? Like, there's no point in taking these. You literally need, like, seriously, you need like 4 or 5 good trades in a full month to get a max payout. Like, 4 trades, 5 trades in the full month, literally 1 trade per week, and you can get a $25,000 payout with Top Step. That's just Top Step. I'm not counting Alpha Futures, Lucid, all these other platforms that you can use to obviously copy trade and make 10 times the amount. Discipline over fear of missing out. Many traders lose money by forcing setups. Obviously, we just went over all this. Patience and waiting for A+ setups is key. Now, there's a big misconception with waiting with A+ setups. And I actually struggled with this while becoming profitable. I was profitable, I just wasn't able to scale myself higher. I would only take like a $2,000 payout per month and I couldn't get higher until I actually solved this issue. And that issue was hesitating on actual setups because they weren't A+. Now, if I see like a stupid little thing on the 1 minute, let's say I see an inverse fair value gap on the 1 minute, but on the 1 hour, my draw on liquidity is clear. 5 minute, we're retraced back into a gap. 15 minute, we're retraced into a gap. We displaced out of it. We're going straight to that draw on liquidity. That 1 minute inverse fair value gap is the least of my worries, bro. I do not care about that inverse fair value gap. That 1 minute inverse fair value gap is not going to ruin my whole entry because all the higher time frames are aligned. Everything is aligning, but off that one stupid inverse fair value gap, I'm not going to take the trade and I'm going to hesitate and I'm going to lose out on a big opportunity of making actual money. So that's what I really recommend also. By taking A+ setups, yes, take good setups, but I'm not saying take A+ to the point there's never a perfect trade in your life. Like genuinely, it's very rare to come by a super perfect trade that every single thing aligns. The draw on liquidity is super strong. Your retrace is perfect. That's a very rare case. That's like genuinely not going to happen most of the case. So you should not hesitate when you see a decent trade, take the trade. A+ as in don't take stupid like realistic like stuff. Don't trade if the draw on liquidity is not clear or if you're in the chop, like if you're trading in chop, like obviously don't do that. Doing nothing is sometimes the best trade. Now what I mean by this, when I wake up in the morning, I literally sit down like this. Half the time I'm not even sitting down. I'm literally on my phone like this. And I'm scrolling. I'm literally just watching TikTok, Instagram. That's my only time to actually sit down and watch stuff like that. And I don't really care about what price action is doing if it's not in my favor. If obviously market opens great, the first 5 minutes I see, okay, we're low-key displacing towards draws and liquidity. And you know, I feel that day is going to be a good day. I'm not going to look at my phone because I want to pay attention and I want to watch what market is doing. Now, this only applies to people that are like already know what they're doing. If you're still learning, do not go on TikTok while obviously watching the candles. I really recommend watching price action and kind of experiencing, getting that discretion on how it works. But I'm literally scrolling over here and then every like 30 seconds I'm looking at my screen just to make sure that my setup's not forming or like if it's getting closer to my draw on liquidity, I want to take a trade. That's different. But I'm literally sitting here on my phone. I'm not doing absolutely anything. I don't even care about the charts until I see my setup or until I see a proper draw on liquidity formed with a nice displacing candle towards it. I won't do anything. I'll just sit there. So doing nothing, you're getting paid no matter what. Like realistically, think of trading as like a salary. I like to use this. idea, as in imagine you could pay yourself max payout. Let's just say all of you guys are max allocated 50K accounts. If you compare yourself guaranteed $25,000 a month, right? If you compare yourself 100%, let's say you're making 300,000 per year, guaranteed salary. But the only reason you're getting that guaranteed salary, if you sit down, do not do what you're only supposed to. Obviously, we're humans. We're gonna make mistakes. We're not gonna for sure get that 300,000, but you can get that 250,000. Realistically, the rest will be mistakes, blowing these expenses, whatever the case is. But if you sit down and do stupid stuff, instead of making 250, you can negative that all the way to like losing money or even making only 50,000, for example. Just sit on your hands, don't do anything, as you're gonna eat into your yearly salary. Do what you're supposed to be doing. When you know you're not supposed to be doing it, don't do it. I like to also say this. I actually made a TikTok recently about this. If whoever you're doing this for, like let's say most people are doing this for their family, let's just say, if you're trading to obviously retire parents or you're doing this for your family, imagine your mom and dad understood how trading worked and they sat there and watched you do something stupid that you're not supposed to. Imagine how retarded you're gonna feel. Like realistically, you're gonna sit here, you're gonna take a trade, you're gonna purposely, or like not purposely, but intentionally take a trade when you're not supposed to, blow your account because nothing was right. You did not trade towards a draw on liquidity. You just entered because you felt like it. And you're gonna look at your parents and like they're gonna look at you like, what the hell are you doing? You wanna retire us like this? Just kind of take that into consideration next time you're taking a stupid entry. Just do whatever you're doing for, whatever it's SVJ or for his parents, retiring your parents, whatever the case is. Just think of it like that. Like you're doing it for that. If you're gonna take a stupid trade, you're just cutting out of that. So always keep that in mind. What to do during slow weeks? Review your past trades, backtest, study the charts, and refine your model. So study charts, refining your model really depends on if you have a profitable model or not. If you don't have a profitable model, bro, literally I give a free one in my Discord. Like I literally tell you guys my profitable model. You guys can just copy it. I'm living proof. There's multiple people in the group in the Discord that are also living proof. Obviously, the people that I mentor are also living proof that this model literally works. So you have no reason to not be profitable with this model. Again, I can fully explain that. I think I have a full YouTube video on it as well. But so this one is really depends. If you have your own model and it's not there yet, then refine your model. Backtest your strategy. So whatever strategy you're testing, do not jump between multiple strategies. Backtest whatever you've been trading and see if you're profitable on backtesting. If you are and you're not profitable on actual live markets, that's a psychological issue, realistically. Like if you're profitable backtesting, then that's a full psychology issue. Review your past trades. Go through what you took last week. See what you did right. See what you did wrong. Prepare for the next week. See what else you can do to improve your trades. See what you could do to minimize your losses. See what you could do to maximize your wins. Now, 6, long-term perspective. This is literally what keeps me not really caring if I don't even trade for a month. Even if I lose 20 grand in 1 month, I don't care. Like I really don't care. It does not affect me because I know in the end I'm doing all this as a long-term position. This trading or entrepreneurship stuff is not something where it's like a job where you're guaranteed a $3,000 or $5,000 income every single month as long as you show up to work for 8 hours a day. This is more so. Even if you don't show up to work today, even if you don't show up to work tomorrow, even if you don't do what you're supposed to be doing this day, you're like, okay, I don't feel like trading today. I'm gonna go out with my friends this morning at 6 a.m. in the morning if you really want to. You don't have to. In the end, your goal is still going to be making profit that full year, not making profit that day, not making profit that week or that month. Now, focus on monthly and yearly performance. So don't focus on what happens in the day. If you're going to sit here and be upset that you lost $1,000 today, that's going to ruin your full trading career, realistically. You have to sit here and not care. You know what I do when I trade? Even if I take a loss, let's say I take a loss, obviously that's times 5 too. So if I take a $700 loss, that's times 5. So I'm losing what, like $3,500 or whatever that number adds up to in that one day. Obviously, to a lot of people, that's a lot of money losing in one day. All I do is close my laptop and I keep myself so busy to the point that I don't even remember that I lost that amount. It'll come to tomorrow morning. I'll be like, wait, I don't even remember. Did I take a trade yesterday? Did I lose or did I win? I don't even remember. You need to keep yourself that busy or get your mind off of it that much. That's the realistically most profitable traders only do what they're supposed to be doing and trading in that 30 minutes to an hour. And after that, they do not even talk about trading to their friends, even if they're all traders. It does not matter. One red week or flat week does not define your success. So like I was saying earlier, even a month sometimes. It does not define anything. The full year is what matters, realistically. Even a year, more than a year. Your whole potential outcome down the path is what matters. Not you taking a stupid trade today and losing, not losing in a week, not losing in a month. This week I didn't or last week I didn't take a trade. I don't care, because the week before that I made almost a $10,000 balance on all of my accounts, which is a $25,000 payout. I don't care, because realistically people make that, what, 25,000 in 2 months, not even 3 months, if even that, 4 months, damn near. Key message: making $0 in a week isn't a failure. So don't worry if you do not make anything this week. Don't worry if you lost money this week. Your goal is the full long-term position. It's a position where it's not a 9 to 5 every day. It's more of a position where depends on what your hours are, but for me it's 6:30 a.m. to 7:30. So it's my position is 6:30 a.m. to 7:30 every single morning. But my whole outcome is the full year, rather than getting paid $100 a day or $20 an hour or whatever people pay. I'm not even sure anymore. Blowing your account by forcing trades is. So when you blow your accounts, that's when you're a failure, not when you're not making money because you're sticking to your rules. Now, I'm not saying blowing your accounts is you being a failure. Don't take that into the wrong perspective. But it's more so when you're going to take stupid trades and stupid entries, stupid games win stupid prizes. So if you're doing that, you kind of have to expect that to happen. You know what I mean? Overall, this week, I didn't really mind that I didn't take a trade. I had more time for myself, and I didn't really care about anything. Either way, I'm about to request a payout. I just took winning days just to request a payout. I have like 2 more winning days, and I can already request a full max allocation payout. As far as that, I do have it complete for Discord. I give my free signals out and daily jaws on liquidity out every single morning. This literally makes your job 10 times easier. You can literally copy my jaws on liquidity, take the same trades as me if you really want. It does not matter. Use my model. I don't care. I teach all of this for free. I do have a mentoring service where I do hold your hand all the way through profitability with a full money back guarantee if you do not become profitable. That's how confident I am that if you actually stick to doing what you're supposed to be doing, you will become profitable. Anyone could do this. Obviously, no money back if you're going to sit there and be lazy and not do the work. That's different. A trading chat, trade review, where I put what trades I really thought for the day was decent and what I think you could have possibly took and what I think was not a good trade if you took. Overall, it's complete for free. You can join it with the Discord link in my bio, and you can also go to WAP to either see the mentorship offerings or even DM me on Instagram or Discord or wherever you'd like, and also join the free Discord through WAP as well. And that's it for today's video, and I'll see you guys in the next